Good morning, Paul Georgie from Allendale. It's December 9th, Friday morning, and the USDA has lived up to expectations. The production side of the numbers that we received this morning hasn't changed in the corn and soybeans here in the U.S. The demand side, only slight change there. 5 million increase in ending stocks in corn from 843 up to 848. That change came in a 5 million reduced usage in other industrial uses. So not a very big change, saving all the gusto here for the January report. However, in soybeans, they did change the ending stocks, and as we thought they might, and actually hit Allendale's numbers right on the head at 230 million ending stocks compared to 195 last month, increase of 35 million bushel as far as an ending stocks, and lack of demand is the main reason there. Wheat also, they did raise the ending stocks, changed the demand side, and raised it from 828 million bushel up to 878 million bushel ending stocks in wheat. So plenty of feed grain around. And then the real surprise comes when we get to the world ending stocks. Corn, they raised the world ending stocks in corn from 121.6 up to 127.2. Soybeans from 63.6 up to 64.5. And the wheat ending stocks, 202.6 up to 208.5, over a 6 million metric ton ending stocks number there. Well, where'd they get all this from? In the corn, the ending stocks increased there because of China. The USDA seen that China's government numbers of 191.8 seems to be the right number, and that's what USDA put out here. That's an increase from the 184.5. So what it does, in that number alone, you've got to be very suspect of how much more corn will China be buying, and if they're buying corn, it's going to be only to fill immediate needs or fill spots where they've got a void because of the huge increase in their production of corn this year. The soybeans, not much change in production from what the estimates were last month on the world numbers. However, they did raise wheat production in Argentina, Australia, China. All of those numbers were increased. Also, wheat production in Canada was raised. So a lot of numbers that we talk about here this morning. Bottom line is, how's it going to affect our trade? We've got markets that have been under a lot of pressure for several weeks now. This certainly isn't any bullish numbers, but you've got to be a little bit concerned. We're going to open lower more than likely, a couple lower in corn, 2 to 5 lower maybe in the soybeans. With this kind of adjustment, you've got to expect that we're going to be 10, maybe 15 lower in the soybeans because of the larger carryover there. And then because of the extreme oversold condition of these markets, don't be totally surprised if we get some kind of a bounce out of off of the negative opening in these contracts, just simply because of the oversold condition. Now we're going to look at outside markets, and we've got the EU pretty much agreeing on a new treaty. However, there's a few countries like Britain that is not in alignment with the new treaty, so there's still some discussions there. And we're going to continue to get a lot of headlines out of the EU here over the next several hours and create some nervousness. However, we've got the euro currency a little stronger. The dollar is down here this morning. We've got gold up, crude oil a little higher here as we speak. So going to take, after the report is digested here by traders this morning, we're going to go back to focusing on what's happening in Europe, the financial crisis in the world, and how it's going to impact trader confidence. Are traders willing to come in, buy commodities, and hold them through the weekend? In the livestock trade, cattle really are in tough shape here from the technical point of view on the charts. Also, cutout values we've been talking about have been struggling here for the last several days, and especially this week. Well, yesterday just pulled the plug on the value of choice cutout, down $4.44. Select down $2.85, I think is the correct number there. So we've got cutout values sharply lower. We've got Packer margins deep in the red, and we've got cash cattle that haven't traded yet this week. And we've also, you throw on top of that the negative signals and sell-off that we've seen in the future. So it's going to be very difficult to get these cash cattle to trade at steady money this week, and we'll see if the Packers go out and buy any cattle here late this afternoon. In the pork complex, cutout values there showed a little bit of an increase. Some fill-in buying for the holidays is still in the works in the pork complex. The futures contracts have held some support here for a couple days. The key is going to be where do we go here into the weekend with the cheaper beef prices. The competition at the retail counter certainly could weigh on the pork complex here as well today. So a lot of news, not a lot of positive news, but sometimes that in itself is friendly. Markets are extremely oversold, so be watching for any kind of rebounds. We don't think rebounds will hold at this point in time, but look for opportunities to sell on rallies rather than selling here in the hole, so to speak. If you got any questions, give us a call here at Allendale at 800-262-7538. Don't forget to sign up for the conference that we've got coming up in January. And Greg's got some specials here for us on the Allendale Research Center. Call, find out what they are, get signed up here before the end of the year. We wish everybody a very successful trading day. I'll talk to you on Monday morning. Thank you.